There are rooms where history was rewritten, not by generals, not by kings, by numbers on a page, and the men who moved them. This is the archive they never wanted you to find. It begins in Holland. 1636. A single tulip bulb sells for more than a skilled craftsman earns in a year. Tulip mania, the world's first recorded speculative bubble. Merchants, farmers, nobles, everyone believed the flowers would keep rising. Contracts were written for bulbs not yet grown. Paper promises traded for real fortunes. Then, one February morning in 1637, buyers simply stopped showing up. No announcement, no warning, just silence at the auction house. Within weeks, bulb prices collapsed by 99%. Entire family fortunes dissolved into soil. The Dutch called it collective madness. History calls it the blueprint. The South Sea Bubble followed in 1720. A British company promised investors riches from trade with South America. The only problem, they had no real trade. What they had was influence. Politicians were bribed. Share prices were artificially talked up. The public, dazzled by the promise of easy wealth, poured in everything they had. Isaac Newton himself lost the equivalent of millions. He later said he could calculate the motions of heavenly bodies, but not the madness of people. When the bubble burst, banks failed across Europe. It forced the British government to regulate financial markets for the first time. The architecture of modern financial law was built on the wreckage of that lie. Fast forward. New York, October 1907. The Panic of 1907 nearly destroyed American banking forever. A failed attempt to corner the copper market triggered a chain reaction. Banks began calling in loans. Depositors lined up in the street to withdraw their savings before the doors closed for good. The panic spread like fire. No central bank existed to stop it. One man stepped forward, J.P. Morgan. He locked the heads of the major banks in his private library and refused to let them leave until they agreed to pool their resources. He personally stabilized a collapsing financial system. But the world had seen something terrifying. The fate of millions rested in the hands of one private citizen. 6 years later, the Federal Reserve was born. Dark money had forced the creation of modern central banking. Then came the roar of the 20s. Everyone was getting rich. Ordinary Americans borrowed money to buy stocks. Prices climbed every single week. Men quit their jobs to trade full-time. The newspapers called it the new era of permanent prosperity. But in the summer of 1929, the cracks appeared. Consumer spending dropped. Industrial production slowed. The warning signs were everywhere. Nobody looked. On Black Tuesday, October 29th, 1929, the Wall Street crash erased billions in a single day. Investors leaped from buildings. Fortunes that had taken decades to build were gone before lunch. What followed was the Great Depression. Millions unemployed. Banks shuttered. Soup kitchens stretched around city blocks. The New Deal was born from the ruins. The Securities and Exchange Commission was created. Markets would never again be the wild frontier they once were. The archive moves forward. Tokyo, the 1980s. Japan was the future. Property prices in central Tokyo were so high that the palace grounds were theoretically worth more than the entire state of California. Japanese companies bought Rockefeller Center. They bought golf courses in Hawaii. The belief was simple and total. Japan would never stop growing. Land prices would never fall. The Bank of Japan raised interest rates, then raised them again. The bubble didn't burst slowly, it detonated. By the mid-1990s, Japan's stock market had lost over 70% of its value. Property prices would not recover for 20 years. An entire generation of Japanese workers entered adulthood during what economists call the lost decade. Some say the lost decades. Japan is still rebuilding its economic confidence today. October 19th, 1987. Black Monday. In a single day, global stock markets lost over 20% of their value. No news event triggered it. No war. No bank failure. Computers were now executing trades faster than humans could think. As prices fell, automated sell programs kicked in, which drove prices lower, which triggered more sell programs. A feedback loop of machine panic. By the time human hands tried to intervene, the damage was done. Black Monday revealed something new and disturbing. Technology had introduced a type of risk that no one fully understood. Circuit breakers were introduced. Trading halts became standard, but the ghost in the machine never went away. The late 1990s. The internet was going to change everything. It did, but not before destroying millions of investors first. The dot-com bubble inflated through pure belief. Companies with no revenue, no profit, no real business plan raised hundreds of millions in days. Pets.com, Webvan, Boo.com. The stock prices climbed because everyone believed the future was worth any price today. When the Nasdaq peaked in March 2000, it then fell for 2.5 years straight. $5 trillion in market value evaporated. Entire tech sectors were wiped clean. But from the wreckage climbed the survivors. Google, Amazon, Apple. The companies that actually had substance. The crash taught a brutal lesson. The future is real, but irrational exuberance kills you before you get there. 2008. The most documented financial crime scene in modern history. For years, American banks had been packaging worthless mortgages into complex financial products and selling them to the world. Everyone was getting fees. Everyone was getting bonuses. Nobody was asking what happened when the homeowners couldn't pay. When they couldn't pay, everything collapsed. Lehman Brothers fell in a single weekend. Credit markets froze worldwide. Governments injected trillions to prevent a second Great Depression. But millions lost their homes. Millions lost their jobs. The banks were saved. The people were not. Occupy Wall Street filled the streets. Trust in financial institutions collapsed to levels not seen since 1929. And somewhere in the darkness, Bitcoin was born. March 2020. The world shut down overnight. Stock markets experienced their fastest crash in recorded history. The Dow Jones dropped 37% in 33 days. But then something strange happened. Governments flooded economies with stimulus money. Interest rates fell to near zero. People trapped at home opened brokerage accounts. Stocks that should have been destroyed came back stronger than before. GameStop, AMC, the Reddit rebellion. Ordinary people realized they could move markets. The power dynamic shifted, at least briefly. It was chaotic. It was strange. And it revealed that the old rules of market panic had been rewritten. Then crypto, the 2022 crash. Bitcoin had touched $69,000. Entire ecosystems of digital finance had been built on the promise that this time traditional rules did not apply. Celsius Network promised yields that no conventional bank could ever offer. 3 arrows. Capital borrowed billions it could not repay. Terra Luna collapsed in 72 hours, destroying $40 billion. Then FTX, one of the largest crypto exchanges on Earth, revealed it had been quietly using customer funds. Its founder, Sam Bankman-Fried, had been celebrated on magazine covers and invited to speak before Congress. He was arrested at his desk. The 2022 crypto crash was tulip mania with an internet connection, new technology, ancient human nature. Every panic in this archive follows the same hidden pattern. First comes the boom, the story that this time is different. The warning signs politely ignored. Then the moment fear escapes the room. Then the silence where fortunes used to be. What changes after the panic? Laws? Regulations? Central banks? New technology? New rules? But human nature stays exactly where it always was. The men in those private rooms knew that. They counted on it. The archive does not forget.